On the property show today, we are shifting gears to speak about real assets versus real estate stocks. Now, should you buy a second home as an investment, or are you better off investing in some of the top real estate listed companies which have clocked record sales in 2023? We are talking about the financial year. Now, after all, if sales are doing so well and experts believe that residential real estate cycle has turned bullish, then these companies should reward their shareholders quite handsomely. Now, joining me for this discussion, Ashish Shankar, MD and CEO of Motilal Oswal Private Wealth, Rahul Goyal, CEO, Equity Master, and Adhidev Chattopadhyay, Vice President, Real Estate and Hotels, ICICI Securities. Now, we will start with Adhidev because he's recently done a thorough analysis of India's listed companies, developers essentially, and this is what the report says. Listed real estate developers will continue to see market share gain. Top listed developers are set to record FY23 sales bookings with about a 32% year-on-year growth. Now, residential prices have risen by 7% in FY23 after remaining stagnant over FY18 to 22. That's a long 5-year period when prices did not move. Yet, BSE Realty Index has seen a 16% decline in the last 1 year. Now, Adhidev, let me start with you. Now, why is there such a dichotomy between the performance of real estate companies, stocks, I would say, vis-a-vis their sales and sales performance? I mean, the index has declined 16% while the broader markets have just declined about 5%.
Yes. Historically, as we have seen, real estate is a pretty cyclical sector, especially obviously in the residential space. So whenever interest rates rise, right, it does tend to have an impact on the affordability and the demand. So obviously markets seem to be pricing in a slowdown where demand would go off the rails and maybe sales bookings decline in the coming year. However, what we have tried to highlight in the report also that the interest rates are still off the historical highs, and the prices, more importantly, haven't gone up much over the last 5 years. So we had from FY18 to FY22 like more or less stagnant pricing overall, and last year even it is just up 6-7%, which is more inflation linked to the whatever underlying increase in the construction costs. But yes, right now stocks seem to be pricing in a slowdown, and the premium to NAV which was there last couple of years, that also seems to have gone away for the moment. So when we talk about slowdown, it may be the rate of growth is slowing down in terms of the sales bookings.
Ashish, you have a take on it. I mean, Adhidev is saying that the bottom lines are looking better, the market is moving towards listed developers, yet there's a big disconnect between the two.
Right. So Manisha, I mean, stock markets, as you know, are forward looking. And if you look at the behavior of these real estate stocks, year back, they had rallied quite a bit. And I kind of really agree with the report. It's been a phenomenal time for organized real estate developers. I mean, I was just reading his report. Over the last few years, the share of the top 9 developers has gone up to almost 33%, and balance sheets have also got deleveraged. So right now the market is worried about a couple of things, and one of them is the sharp rise in mortgage rates. I mean, mortgage rates have gone from somewhere close to 6.7 to almost 9.5%. So markets are a little worried that whilst the past real estate sales have been good, probably the next 1 year may slow down a bit. But my view is we are in a very strong cycle, and at some point these stocks will re-rate again. Markets will take view of the fact that over the next 3 to 5 years, the cycle looks good, and the unorganized to organized trade in the real estate industry is playing out quite well.
Rahul, would you agree with that? That there's been a very sharp increase in home loan interest rates, and there could be an imminent slowdown, and that's what the markets are pricing in. But there are also lots and lots of positive factors for real estate stocks to do well.
Yeah, I completely agree with Ashish. So, there is, it's not just for real estate. I think for everything, there is a headwind out there in terms of higher interest rates. So you have to grapple with that. Everyone has to adjust to a world which was used to low interest rates. Now you got higher interest rates, and the outlook for lower interest rates has got, with every passing month, is pushed more into the future. So if you look at demand for real estate, one is based on need, which I think primarily doesn't change a lot, right? If you need a house, you need a house. Whether you pay 7% or 7.5% or 8%, it won't materially change your decision. Maybe a little bit, but not materially. But I think the investment demand for real estate changes dramatically because suddenly you are now getting a real yield in safe money. So the hurdle rate for investment goes up. And unfortunately, I think what has happened for real estate is the property prices have moved up quite a bit in the last couple of years. If you take the pandemic as the bottom, right? In June 2020 or whatever that period is from there on. So yeah, I completely agree with what has been said. There are headwinds. There's and if I may add, the numbers that we're looking at are all backward looking, right?
Yes.
So if you're an investor who is always scouting for opportunities, you sell on the news. You don't buy on the news, right? So on the
So you're saying that the best part of the, increase or let's say rise in stocks is already done probably, and maybe going forward that could be tepid. Adidev, you've got a buy on several stocks. In fact, I'm looking at the list and it's pretty much most of the good listed companies from Mahindra to Oberoi Realty to DLF to Macrotech. Do you believe that when the markets bounce back, these stocks are likely to bounce back faster than the markets, or what's your view?
See, we cannot take a call on overall markets, right, per se. That is dependent on a large number of factors. But see, specifically, yes, we do believe these stocks would do well over the next couple of years. What we also said, there is, as you already know, there has been a lot of consolidation in the space, right, already over the last 6-7 years, in fact, right. You have multiple things which are worked, like Demon, you had NBFC crisis, you had GST, RERA, you had COVID. So there have been already a lot of things which has led to a lot of consolidation in the market. And even though the overall market size may not grow, right? The industry size, the growth may be 5 to 10% overall in terms of maybe the pan-India top 7 cities. But these companies will outperform overall. And what you have said, the market share of the companies will grow, but it's just below 30% to in the mid 30s over the next couple of years. So these stocks should do well. Obviously, companies have outlined pretty ambitious growth plans. So we have to see whether how much of that fructifies. I'm talking like some companies are looking to even maybe double the sales over the next 3 years. Obviously, right now they may seem ambitious. But as I said, even if they do not get to those sort of numbers, right? Even a decent double-digit sort of CAGR, right, in the sales bookings will be received well by the market eventually. Even while though for the near term the stocks may not be the near-term stock performance may not be reflecting that.
So Ashish, you deal with a lot of HNIs and wealthy clients. There's been some sense that they're also looking at right now investing in probably a residential unit, hoping that they are going to make reasonable returns on a hard asset. So if you were to weigh buying a hard asset like a housing unit or a second home vis-a-vis any of these real estate stocks, where would you recommend that these clients put their money or park their funds?
Right. So, Manisha, I'm just going to take you back maybe a couple of years. Coming from COVID, obviously, a lot of us spent a lot of time in our homes, right? So, as soon as things opened up, affordability is extremely high even today after prices having moved up, and mortgage rates had collapsed. So there was a lot of buying of residential real estate. I mean, people who had homes, upgraded their homes. People who didn't own homes went ahead and bought homes. So if you look at the report that has been published, I mean, the past data tells you that there has been a massive growth in consumption of residential real estate. There has also been a massive growth in consumption of second homes. I suspect that the demand for residential real estate will continue because more and more people will want to own homes. But overall, if you look at affordability, I mean, I'm just taking some cues from the report. It's at 3.2 times annual income. So I suspect that the volumes should come back and we are in a good cycle. But I think the demand for second homes will start tapering off as things have opened up. Now, to your question on making money on hard asset, I still don't see a lot of HNIs buying real estate so that there will be price appreciation. And most of the HNIs are buying houses so that they can live in it today. Okay. A lot of the demand is basically end use demand, if you ask me.
Okay. Rahul, I've been having a lot of interesting conversations. People are actually beginning, I'm kind of going back to those 2011, 12 days when people pick up the phone and ask me, do you think, maybe it's the headlines in the newspapers, housing sales booming, etc., where people are asking me, should we go ahead and buy one unit and as a rental income or as an investment? What's your view on it? Would you say, looking at the increase in rental yields as well, slightly better than 2% now, about 3.5% in your market like Mumbai, is it worth considering?
So I'm going to share an experience as someone who's been through this journey. So if you are buying an apartment today in Bombay, and let's say western suburbs, relatively premium, I think, and Ashish can correct me, you'll probably get a yield of 2.5 to 3%, right? And that means this is 2.5, 3% gross. You have to still pay the maintenance on the building. You have to still do all the insurance and taxes. And the other thing is that now you stack that up against a real inflation that you're facing. So from the moment you buy, you are underwater in terms of a return. You've got a negative return. So effectively, you're buying real estate purely for capital appreciation to not just make up for the gap in annual devaluation, but also then to get a nice overall return. And to my mind, I don't think you should be buying real estate unless you're really smart, you got the right opportunity. All that is different. We're talking about the masses here, right? It is not the best investment. Yes, it can be a great way to preserve wealth. I'm not even going to the need. That's the best thing you can do. If you have a need, you should buy the real estate. Mentally, the satisfaction, the peace, the security you get, no return can match that. That's a separate thing. But in terms of yield, I don't think it's the best avenue to invest.
All right. So you're saying not as an investment. You want to upgrade your lifestyle, go ahead. You need a home, go ahead. Okay. Quick question then. It's nice to hear these sane voices because, it is really not the savvy investor who will take big punts with real estate. It's the masses who then say, am I missing out on something? Salaried class which believes that if I buy a second home, maybe I'll get spectacular returns and I might not. There's a FOMO which is happening right now, at least in the NCR market for sure, and some parts of Mumbai. Why are big investors and mutual funds staying away from real estate stocks despite the fact that the market is cleaned up so much? Ashish, do you want to take that? Because I still don't see, if I look at mutual funds, their ownership is very rare. Like one Godrej Properties maybe, one Macrotech maybe. They're not taking any big punts with real estate stocks at all.
Right. See, you also have to consider, Manisha, that we are coming out of a very difficult cycle for real estate. And generally, a lot of other businesses and stocks have done well in the past. So it takes a little time for institutional investors to rebalance and even for these stocks to eventually appear in the index. If this is a favorable cycle, which I do believe it is, then these stocks will again, after taking a breather, play out reasonably well. The second point, Manisha, is that, there are many ways to play this real estate cycle. You need not necessarily buy the developers, right? There are a lot of material companies which supply to these developers, or for that matter, there are a lot of financial institutions like banks which finance real estate. So I guess, playing the real estate cycle need not necessarily mean you own a lot of development companies. I guess there is still that hangover of the past where, the investors still feel that this is an asset-heavy business, although I know there are a lot of developers who've gone asset-light, but still it's an asset-heavy business. The cycles are long. So I think investors are preferring to play this cycle a little differently.
Rahul, quick take on this aspect.
In the initial notes that I received from you, there's something in the middle, which is a real estate investment trust. And the REITs are, again, not a bad opportunity. But again, in India, we don't have many REITs firstly. I think you have 3 or maybe 4, I don't know.
3 REITs. As of now, 3 REITs.
3 REITs and some InvITs. You have to be careful at what point you buy them because the yield varies a lot. I know for whatever reason, the REITs in India are very volatile. Ideally, they should not be that volatile. And if you can lock in a yield of 8% on a prime property, that's superb because the rental yield is 2.5. Here you're getting to write 8%. It's far better than investing in a real estate.
Okay.
A REIT seems to be better.
All right. Gentlemen, we leave it at that. Thank you very much for sharing your views. It's a very interesting topic and also a question that's asked often. On the other side, we come back with how can home buyers in a stuck project work with a new developer to restart construction and complete their project. Stay with us.